So now let's look at a slightly more advanced, example, but still using all of the same concepts we should now be starting to get pretty familiar with. So obviously this is a line chart, but imagine this would be a typical representation of a complex sort of range, which is obviously, that can happen a lot in the real life markets, right? It's not always going to be very simple, basic, bullish, and then bearish order flow like we see in the textbook. So how can we apply what we've been using to this, right, when we have a blank chart? Well, what's the first thing we should always do? The first thing whenever we have a blank chart, right, structure is obviously king. That's the first thing. But then what's the first thing within structure? It's swing structure. So we want to find out what current swing range are we within. Well, in this instance, this is a swing high here. So this was a swing break of structure. Okay, so let's use the highlighter tool to do our swing points. So that's our swing high. Obviously, once this breaks, when we get the break of the swing high, we get that bullish boss, we now look at the lowest point. Obviously, in this case, this was going to be our swing low, and then we move up, and then we start to have a sizable pullback. So at that point, we can mark that out as our swing high. So that brings us up to this point here. So what do we expect after a swing break of structure? We expect a swing pullback. So we start to get that pullback to form that internal lower low. We then get an internal lower high, and then we get an internal lower low. So we can mark that on as our internal break of structure, our bearish internal break of structure. And one thing I forgot to say is we're going to start to bring in our order flow now. So when we did have that bullish break of swing structure here, that gives us what? It gives us a swing demand range, right? So we can draw from the high to the low. Doesn't really matter what order you do it in, and drag it across. So we know that when we have that swing pullback kicking in, that this is a pretty good area to either target your counter trend shorts into, and or start to begin to look for buys as it comes into towards this level. And obviously we'll have our nice refined pivot demands drawn within here. But for now, that's the simple order flow expectation, right? What do we expect for swing order flow? We expect to continue: initiation, mitigation, continuation. Okay, cool. So we now know that the internal structure has shift bearish. So let's put on our little dots, because this will help as things get a little bit more complex as we go along, right? So we can draw on our internal lower high there. And now let's start to draw on the bearish internal order flow. So from the low of the range to the high of that internal range, and then drag it across to where it gets broken. So we can start to see that internal bearish order flow kicking in. So once we get that bearish break there, what do we then expect in terms of the internal structure? Just try and, if you get confused, just think of one thing at a time and then start to think about the next thing and how they sort of interact, if that makes sense. So just look at one piece of the puzzle and then think about the next piece. So what do I mean by that? Well, let's just concentrate on the internal structure. So we know we're bearish, we've had the supply range, we've had internal breaker structure to the downside. So at this point, this would be the active internal range that we are within. Okay, so the expectation from purely just an internal structure perspective is that this will be a strong or protected internal lower high, okay, which then made a lower low. So purely from an internal structure perspective, the expectation would be that this will hold, that price will pull back into here, that the bearish order flow will continue, that this high will not be breached, and the internal structure will continue. That's only if you're thinking just purely about internal structure on its own, right? But obviously, we have to be a bit more advanced than that. We know that swing structure is more powerful, and price has mitigated and had a sizable swing pullback into the prior swing demand range, okay? So whilst price starts to move up, maybe we've had a bullish shock down here, right? We can be anticipating that potentially that swing high low has formed, right? But it's not until we get that bullish internal breaker structure, right, of that larger structure, that then we have a much stronger signal that potentially the swing high may be in place. So once we get that bullish internal breaker structure there, okay, we can obviously draw on our internal low dot there, and then we get that internal higher high here. Now the internal structure is bullish, right? So we're talking about price at this point here. So now the internal structure has aligned itself with the overall swing structure, and we can start to potentially think that this could be the swing high low forming, and now we can look to target this weak swing high. Because once the larger internal structure aligns itself with the swing structure, the start of that bearish internal run, right, is now weak, which in this case lines up with the weak swing structure. So once we get that initial bullish IBOS, what do we expect? We expect the bullish internal ranges, that bullish internal order flow to continue until that weak high goes, okay? So at this point here, when we get that initial IBOS, we can now draw on our new internal demand range, right? From the high to the low, drag it across, right? And now anywhere within this green box, right? Because that is what? That's the internal range we're within. When we get that, let me get rid of this orange line. When we get that boss, right? Just like the same way we wanted to know what swing range we're within, we are within that swing range. When we get this boss now, what's the internal range we're within that high? And we know that this is the internal low. So that's your active internal range. And we know that price can do what? Initiation out of the range, and it pulls back to mitigate anywhere within this prior swing range, that green box, right? Anywhere within here. That's what we expect. So we pull back into that green range and then we continue up, which is what we would have expected. We would expect that bullish internal order flow to continue. Okay, so when we get that next bullish IBOS, we can again draw on our new active internal range, which is between those two dots I've drawn, right? This low here and this high here. And we have a new internal demand range, right? We're following that internal order flow. So now what do we expect? We would expect the internal structure to pull back, mitigate this prior range, and then continue to the upside, right? And take out this high and then potentially this high, right? We'd expect that to continue until this weak swing high goes. But as we can see, price probably mitigates some supply within here, right? From that weak swing high, sometimes that can happen, right? It can play out. And then what happens? Instead of price continuing to form an internal high low, we get a bearish internal breaker structure. So can you see how just mapping your swing range first, then looking at what the next sort of larger internal structure will be, because of course it could be a bit more complex with this, and there could be like these little movements within here, but you kind of just want to be focusing on, right, you've got your initial larger swing, and then what's the next sort of biggest significant swing, right? And then that becomes your first layer of internal structure, if that makes sense, right? So that's the main one you want to then be focusing on. So we were initially bearish, then we got a bullish IBOS after mitigating the prior swing range, so we know there's a decent chance the swing high low could be in place. We then get a bullish IBOS, which then gives us our next internal range. We come down and mitigate the range and we continue up. And then we expected this new range here, right, between this low and this high to mitigate this green range and continue up. But in this case, it didn't. It mitigates some supply within here, and that leads to a bearish IBOS, right? So as price is coming into the supply here, we know it's a weak swing high. And if you were shorting from here, you'd be shorting from supply at a weak swing high against the swing trend and against the internal trend, right? So this would be very, very risky. So price could come up in here and it could give you like a bearish chock, for instance, right? That bearish chock is what for us? That signals, a chock signals an internal pullback. So at that point, we could just assume that now potentially that internal pullback is coming in. This is a strong protected internal low, and it's just going to mitigate this range to then give us potentially a chock, and then we would look for that, right? So if we were to get a bearish chock up here, we could only really assume that that's the pullback that's about to start, and we would imagine that that's likely to happen, right? That would be the expectation and the framework that we use. But in this instance, that low doesn't hold, that strong internal low, and it breaks, and we get a bearish IBOS. Okay, so now what has happened? Now the internal structure has switched bearish, right? So at this point, because the bullish order flow has been shifted, and because this bullish leg, right, this run, it failed to take out the high, when we get that bearish IBOS, remember the rules from advanced market structure, you should know this. Now this low here becomes weak, and we can target this low because it failed to take out the prior leg here, which happens to be the swing high, right? When we have this, get rid of these lines, when we have this leg here, right, and then it shifts bullish and internal structure, right, the origin of that high is where we expect the ranges to continue until it takes it out. But in this case, it fails to do so. So as soon as that shifts bearish, now we can target this larger weak low, right? So now the internal structure is bearish. So now what do we have? Now we have an internal supply range. So drag that across to where it's broken, right? So now what we expect is price to form a series of lower lows and lower highs until it takes out this low, right? And for that to be respected. So let's quickly draw these on. I know this takes a little bit longer for me to do it this way, but I think it will, sometimes it's very easy. You can see a fully drawn up nice diagram and it all makes perfect sense. Obviously when you're in a live market or you're trying to make sense of candlesticks, it can be a lot more complex. I think it's worth us taking our time and mapping it out step by step. And I would encourage you guys to draw your own ones on and try it yourself. So we get another break of internal structure here, which gives us what? It gives us another internal supply range, right? So you can see the bearish order flow sustaining itself. So we get the initiation, mitigation, continuation. which is obviously the initiation out of that new range, mitigation, continuation, right? Until we take out this weak low. So when you get that first initial, like say bearish IBOS here, what you could then do on your charts, if it helps you as well to kind of keep track of it, is you can write weak low or like put a liquidity thing there, and you know that like that low is likely now to become inducement for something below here, or at least like that becomes a targeted weak low, right? So then that bearish order flow continues. Let's put on our dots so we can keep track of the internal structure. Okay, and draw on our next supply range. Cool. So that meets all of the rules so far on our expectations, right? We were supposed to take out the high, we failed to do so. Then the internal structure shifts bearish, so order flow switches bearish. It's the same thing essentially. Price then pulls back in, and we expect that bearish order flow, that bearish internal structure, to maintain itself where each of those protected lower internal highs are not breached, right? Pulls back, but it never takes the high, it never takes that supply, right? Exact same thing until that low goes. Once that low goes, then we can potentially expect, something might change, right? Because we come into the, say, extreme. All right, we know that the extreme demand zone within the prior swing low, because remember, this is a strong swing low because it took out the swing high. So we're expecting this to hold. As price now comes into this extreme strong swing low, we know that this is the highest probability area to be buying to do what? To catch the new swing low. This is the last point that has to hold if that swing low is going to continue. So this becomes a very interesting area, right? Let's move this down and we can zoom in to look for longs. But before we get to that, let's, where are we with internal structure? So I'll make that a little bit smaller so it's obvious. Let's draw that as our low. We are currently still, bear with me, within this active large internal range here, right? Because that is the internal structure we're within, and we currently just made an internal lower low. So although we've come into a very high probable area for a swing high low to form, and we have to be aware that that is stronger than internal structure, at this point, we could just have this bullish change of character just to pull back into this protected internal, it's a strong internal lower high, right? And then that could continue, right? We have to be aware of that, okay? But that doesn't mean that we cannot trade against the larger internal structure and against the bearish order flow. We can, right? But there are obviously certain ways in which we can do that. So let's say here we get, this could be, and this is what I was trying to say in the other lesson, right? This could be a chalk where it's literally just, like 1 or 2 candles that pulls back, but it also could be a slightly, it could be multiple candles. And that's when you have like the smaller internal structure within a larger internal structure, right? It's going to be dependent on just how big the range is. So this is good where you guys have to use, it's all one and the same thing, okay? So we get that bullish change of character or maybe a smaller IBOS, but we know it could just be to facilitate that movement into this protected internal high to continue to the downside. But because it's the extreme area in which the swing high low can form, this is when it can be high probability to trade against the larger internal order flow, right? And to get in long, right? So we may want to get in long here, but we have to be aware that we are trading against this. So as we get that shift in the smaller internal price action, what do we get? We now get, actually, let me draw on the supply first so you guys can visualize this. All right, we've got a little supply range there. That then gets disrupted as we then get a demand range from the high to the low. And we drag it across, and obviously you can have refined pivot demand within there. And then what do we expect? We expect those ranges to hold, to facilitate that pullback, right, up into here. But what happens? In this instance, demand holds, right? This range here holds, and price continues to the upside, right? So we then get a bullish internal breaker structure. So now what's happened is the internal structure has now realigned itself again, just like it did over here. And now when we get this break here, it's a much stronger possibility that now the high low is in place, especially as there's basically no more swing demand left for it to come into, right? So now when you have this movement here, this becomes our new internal higher high. We're now playing within this internal low and this internal high. So we want to try and catch that next high low because that is going to be very, very high probability. Why? Well, we've mitigated the last point we can mitigate. Internal structure has now aligned itself with the swing structure. So then when we get that internal pullback, this is when like all the stars are aligned for us now to get long and target the weak swing high. All right, you guys should be familiar from that from the advanced market structure module, but now we're just overlaying the order flow onto that, right? The supply and demand ranges, because what do we have? As we get that internal breaker structure here. And we understand from the market structure perspective that we want to catch this high low, but it's like, where is going to be the high probable area to catch that? And that's where we can look at the order flow that happened here. And we can see that these internal ranges all held. This is the last internal of the internal unmitigated range, okay? And this can become, somewhere within this range is going to be a high probable area to look to get long from. Now, maybe there's something like this, right? And this is where you're starting to overlay the other concepts where, say, we had this supply zone, price came into that supply zone, reacted, failed to put another low, flipped to the upside. So we then got the internal breaker structure. We then got the flip. So then we can draw on the extreme of that flip, right? Which is within what? The unmitigated range that we would expect that high low to continue. And then this becomes a super high probable area to look for longs to ultimately target that weak swing high, okay? And that's it. That's essentially what we're looking to do with order flow here. Okay, I just tried to make a slightly more complex example of what can happen, because obviously it's not everything's just picture perfect. We don't just always pull back and then break the swing high, right? Sometimes it can take a while. We can get within larger ranges, but this is how you interpret it all. So get your swing mapping done first, and then you want to look at the next sort of larger internal structure within that. And then obviously if it's a really big swing range we're playing within, we can get structures within inside that. And this is how we interpret it. So, when we're up here and we mitigate supply and then we switch bearish, now we can understand that we're going to probably come down and take out this low. We don't have to, but it's likely. So let's say there's a demand zone within here. You could buy from here, but one, it's already risky because you're buying from a weak low that we expect to get run. But if you are going to do it, right, manage your expectations that it's probably just going to be a quick play into this previous swing range here. Why? Well, because this is a protected / strong internal lower high, because we've got the lower low, lower high, lower low. So if you're going to buy from here, which I wouldn't recommend anyway, because it's a weak, larger low, just expect that movement into here, because that's most likely going to form a lower high and continue down. Now, once we take out this liquidity, we take out this weak low, we come into the extreme demand zone, we then get a small shift either with like the chalk or the smaller internal structure. Now this is a good area to get long, but ideally we want to be buying here before this range is mitigated, but I'll talk about that in a little bit, right? Because that can improve our probability of removing our risk in case we get that movement there, right? And the internal order flow stays bearish. So then we get that internal of the internal staying bullish. We fail to break it, right? So we continue up, because it's only if that low was to go, right? If we got that internal boss here, then what? Then we would have, sorry, it's a bit messy, but we would then have that supply range here, right? Because price broke it to the downside, and then we would expect price to come in, and then continue down, right? If that was the IBOS there, right? Because that should stay bullish till it takes out the high. We only get confirmation that this low is going to go when we get the bearish IBOS. So if that happened in that instance, right, it's poorly drawn, but you get a pull back into the supply range, and then that movement there potentially, right? I'll just redraw that. So this is kind of the highest probable sort of trade I'm trying to point out, is then, you might not want to get in here, and you might want to wait for all the stars to align, but then we get the larger internal structure shifting bullish. Then we can look at this unmitigated smaller range. We've got a flip here, potentially that flip this level, and then we can look to come in within here, right? And then this is where we want to keep potentially buying. We expect that order flow to continue, right? Until it doesn't, and then we can look to buy the next high lows until we target that weak swing high. And then after the break of the swing structure, then what do we expect? Then we expect the whole cycle to repeat itself, because we expect a swing pullback. Okay, now some other little things I'll kind of throw in there that you want to be thinking about is things like, there will be, I think I said this before in the other lesson, right? There will be older supply zones that look pretty good, right? Like you'll see these unmitigated pivots. Like let's say, price comes up to here, but remember, because these ranges are mitigated, what are these old supply zones? Once the internal structure shifts bullish, right? All of these old highs here, they're just liquidity points that we are looking to target. So if we get this bullish breaker structure here, we expect that larger internal pullback, right? So if we see an unmitigated pivot supply zone, we can look to play this movement. And this is why it's advanced. And depending on how aggressive you want to be, how in and out you want to be, how big the actual range is in terms of pips. So you actually do have the risk to reward, i.e. if you get in with a 2-pip stop, is there 20 pips here? So then you've got 10R, or is this a 4-pip movement? Well, obviously then that's not going to be the risk to reward on your side. And this is what I mean by about knowing how to interpret these frameworks into what actually price action looks like on the real chart. So when we get that bullish IBOS and we're waiting for that pullback, if there's enough RR, you could look to play that. So imagine this is the M15, price comes into that level. What are we going to get on the M1? We're going to get a shift in order flow. And then we can play that movement down into here. We'll come into here, and you're going to get a shift in order flow on the M1, right? And then we can look to buy, because now the M1's aligned with the M15 internal, which is aligned with the M15 swing internal, right? So on and so forth. And then that could come into another supply zone up here, right? It'll mitigate that. All right, and then that would shift bearish. And then you might want to play that movement back down into what? Back down into the next demand range. All right, and yeah, and that's literally it. That is literally how the markets move. It's the fractal way in which, you know, the M1 will turn before then the M5 turns, and then the M15 turns, and then it pulls back. All right, you guys should be familiar with that anyway from the multi-time frame analysis videos, you know, back in the original technical analysis module. But now we're kind of just, yeah, diving much more deeper into the differences between the internal structures and then overlaying these ranges on top. So again, I can appreciate that this is a little bit overwhelming at first, and this is why we've tried to do as many examples as we have, slowly making them like a little bit more advanced, you know, layer by layer, and adding bits to it. But yeah, hopefully you can start to see now, you know, there's an infinite number of ways in which I could have drawn this, but the framework is always the same, right? Get your swing structure map correctly, know where your strong and weak swing high is, so you know what order the overall trend is going to be. Then the next thing you want to map is the largest internal structure within that. Know what current strong or weak internal high you've got. Are we bearish or bullish on the larger internal structure? Okay, you know we're bearish, so that means we're pulling back, right? But then we shift bullish. So okay, at that point, the internal structure is aligned with swing structure. So now we expect those bullish internal structures to hold, those demand ranges to hold until that high gets taken out. In this instance, it didn't. It mitigated some supply at the weak swing high, and it shifted bearish. But it's only when that larger internal structure shifted bearish and that larger order flow shifted bearish that then we expect this weak leg to go, right? That whole leg, it's been disrupted now, and that low is likely going to go. So once we get that bearish IBOS there, what do we expect? We then expect each internal range, large range, to hold until that low goes. Once that low goes, then it's much more likely now that all of these mitigations here are going to become liquidity, right? So as we come down, we can still expect that this is a strong lower high, internal high, to potentially go down. But obviously we need to putting all the pieces of the puzzle together to know that now selling from here, even though it is an internal strong lower high, is not as high probability as when we're putting it up into this point. Because when we had that break and we pulled back up and we were trying to short here, we still had this low to target. We knew it was likely this low was going to go. But once this weak low has been broken, and now we've come into the extreme demand, remember, swing structure is more powerful. So this is a strong lower high at that point, and that was a strong lower high, but it's much lower probability to be shorting from here because now we've mitigated strong extreme swing demand and we're expecting that movement. Okay? So ideally we can get in down here, because if we get long and then price comes into here and it continues that overall larger move, right, we can remove our risk. Where we don't really want to be getting long, right, of course it can play out because like I've been saying, swing structure is more important, is when prices pull back up into this previous range, because at this moment the larger order flow is still bearish, right? This is the larger movement, and it's likely that lower high, internal lower high could form. So now when we mitigate that and we come down, right, this is lower probability to be buying now compared to before when you buy from here, because this movement hasn't mitigated the range yet, it hasn't mitigated supply. So we know there's a decent chance we could still get that deeper pullback. But once we come up into here and mitigate the supply, and then we come down, this is much lower probability. It can play out, but it's much lower probability. And obviously it's only once we get that smaller internal IBOS there, bearish IBOS, that we'd actually have confirmation that low was going to go. Okay, but yeah, hopefully you guys should be familiar with that concept. And then once we get the bullish internal breaker structure, order that flow is then bullish, it's in line with the M15 swing trend. Now we can look to buy this movement within here, and obviously we can overlay other concepts, flips, look dropping down to the M1, expecting the M1 to come in, right, etc., 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 and then we continue to buy from those ranges and continue to the upside, right? One of the scenario I'll leave you with is, like, let's say we get a movement like this, right, and then it fails to take out the swing high, and then we get a bearish IBOS like this, right? Let me just draw this out and think about this. So what you often see is people will go, okay, we came into supply here, we moved down and we moved up, which now means we have a flip zone here, right? Because this reacted from supply, it fell to point a lower low, and then we got to push up, right? So this is a flip zone. This is the supply to demand flip zone, right? It's part of this demand chain, right? It's in line with the overall swing trend. So now when price comes down into here, I want to get long, okay? But what you're actually trading from at this point is a weak leg, because order flow has shifted now bearish, because we've had that bearish internal break of structure. And it's not the best drawn example in the world, but we would now be expecting what? We would be expecting that bearish order flow to continue until it takes out, let's draw on, until it takes out the origin of this weak leg, right? Because this leg, it did hold, it held, and then it failed to do its job, and then it switches bearish. So we go down to the origin of where that bullish trend started, right? So then when we get that bearish order flow, although you've got a flip zone down here and it's part of a demand chain, blah, 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 we're now expecting only that movement to then continue down. It doesn't have to, but that's generally what can happen. And people can take losses here, or not even losses, but they get in and then they wonder why that's then happened and it hasn't gone out, even though they entered discount pro trend, etc., etc. But anyway, I don't want to go through infinite amounts of possibilities that can happen, because it's more about, if you can wrap your head around, I mean, to be honest, I personally don't think it's that complex to understand the rules of the framework. It's when you're looking at these examples that I'm going through and you see all these boxes and you see all these lines and everything, especially when you go on the real charts, that's when your brain can get lost. So don't try and kind of memorize all these scenarios. It's more about really understanding the law, let's call them like the laws, the structural laws, which is, let me find it, which is this here, right? Remember, a change of character, which is that break of a fractal high-low, signals that an internal pullback is starting or ending, right? These are like the laws. An IBOS signals that a swing pullback has started or ended. That's the hierarchy, okay? So hopefully if you have that, everything else will fall in place from that. Likewise, if you have a smaller IBOS, that will signal a larger internal pullback is starting to ending. Right, and then if you have the larger IBOS, that will then signal the swing. Right, you have to think about it as like layers on an onion or a cake, and what they all mean. Right, the chalk will signal the internal pullback, the IBOS will signal the swing pullback. But obviously, if there's you've got smaller internal structure and then you've got the larger internal structure, one signals the next one, and then the larger internal structure signals the swing structure. Right, and when you really get that and you understand the order of importance, the hierarchy, then you can work your way from top down and bottom up, and you can figure out what's likely going to happen next. I know I need to see, right, let's just talk through it, right? Because I think it will visually make sense again. I'll end it on this, right? So at this point here, this is the kind of perfect example of what I'm trying to get at. At this point here, when we have that, whether that is a chalk, right, because that was just one little candle, or whether that's like 6 or 7 candles and we're in a massive range, then that would be more of an IBOS, right? The smaller internal of the larger internal. But you see, it doesn't really matter in terms of the actual theory behind it, right? Because that movement there, the break of whatever that is, whether it's a small internal high, so it would be an IBOS, or whether it's just a chalk because it's just a candle, it's the same thing. All that signals is that it's the pullback of this larger range, right? Because that's the larger internal structure, right? Likewise, when we come up here and we get that, whether that's a chalk or just a small IBOS, it's the same thing, because that just signals the internal pullback is over and the next larger internal run is going to go. All right? So this small movement here just signals the pullback of the larger movement. The larger break of structure, of the larger internal structure, just signals the end of the swing pullback to get the next swing run. I don't really want to keep talking about it just in case it just leads to even more confusion, but that's literally what it is. If you can get your head around that, I'm putting this kind of content out, I guess, for the first time. So if there's a lot of confusion around this, or I get a lot of questions, maybe I'll try and think of a better way in which to teach this, and a more sort of clear example of, let's say, the laws of structure and weak highs and order flow, and I'll try and think of a better way to teach it. But I'm hoping that makes sense. And yeah, I'll leave it there. Maybe especially as well when we go on the charts and do a proper walkthrough and we look at tons of examples and we go a little bit slower, the penny will start to drop. I do appreciate that. This is a lot more advanced. There's a reason why it's at the end of the course. And so you really kind of nail the rest of the concepts, this might be a bit too much. But when you do get this, and it drops and you see it on price action, it brings such a systematic, I don't know, it's given me so much clarity and so much confidence in my trading, with knowing what to wait for, when you want to wait for it, how far to target, just managing your expectations of price. And, it's like literally having an X-ray vision of the market. But I'll leave that there, and I'll see you in the next one.